Well, the biggest loser on the markets today was a casino, which is kind of an odd thing to say. Shares of Star Entertainment plunged 33% today to a new record low of just 13 cents. Now, the latest for this scandal-plagued company is that it's running out of cash. In fact, it's only got $79 million left after burning through $100 million in just 3 months. And that was after it was bailed out last month with an emergency loan. At this rate, the Star has only got enough to last a few weeks or months at best. So there's a real risk it could go into administration unless a miracle happens. But with its casino license suspended and the fact it's set aside $150 million for potential fines to do with money laundering offences, things are not looking rosy. Meanwhile, everyone else did a lot better today, even Lovisa, whose shares dropped 10.5%. And today's best performer was Arcadium Lithium, after US regulators approved the company's takeover by Rio Tinto in a deal worth $10.7 billion. But overall, the share market fell slightly by 0.25%. Overseas, it was a mixed bag, with Wall Street up, but Japan's Nikkei suffering a big fall, while gold and iron ore prices rose slightly and oil slipped. And the weak Aussie dollar has dipped below 62 US cents, which is around a 2-year low. And finally, a record $36.9 billion was spent at the shops in November, thanks to the Black Friday sales. Total sales are up 0.8% over the previous month, mainly due to our growing population. But when you look at how much was spent per person, it's clear many of us are feeling poorer and cutting back. So that's why the odds of interest rates coming down next month are still around 75%, according to the markets, which is quite high. And that's finance.